It is exactly 2 p.m. Good afternoon and welcome to Market View. This is the final episode of Market View this week and it is powered by Facebook. My name is Lunglele Makakula. Thank you for tuning in to watch us on our YouTube page, Eswatini TV. We are on DSTV channel 286 as well. Good afternoon and welcome. Today in the program, we look at current trends on tourist arrivals in Eswatini. The acting head of marketing at the Eswatini Tourism Authority, Chunki Mdludi, says with the current trends, they are projecting a long-term growth in the tourism sector. She had a sit-down with business journalist Nelsiwe Ndlangamandla earlier today. The Eswatini Tourism Authority is mandated to market the Kingdom of Eswatini as a travel destination of choice within the country, regionally and overseas, for the reason that tourism is regarded as one of the critical sectors that contribute to the economic growth. And also worth noting is that Eswatini was named one of the world's top 5 countries for travelers in 2020 by World Leading Travel Authority Lonely Planet, and also awarded a Safe Travels stamp of approval by the World Travel and Tourism Council. Stay tuned for this interview. And on our last segment, Serena Spia will connect with us for today's financials. The London stocks rose on Thursday amid a raft of mixed corporate earnings, and the FTSE 100 is advancing as more earnings roll in, and Japan's yen scaled a 6-week high on Thursday. Stay tuned for today's market analysis with Sanele Sibiya. For now, let's go to business news. Welcome back. This is a Market View powered by Facebook. This is our news. Director Trade, the Minister of Commerce, Industry and Trade will work with different stakeholders to ensure the country has vigorous policies that will promote women in trade. The Director of International Trade at the Ministry of Commerce, Industry and Trade, Lungile Matlalela, said this during a workshop on trade and gender at Drell Villas at Eswatini. The workshop has been organized by International Trade Center, the Deputy Prime Minister's Office and the Ministry of Commerce, supported by the EU.
Looking into the interconnectedness of gender and trade, and why it is important for women to be part of the complete value chain of trade. We are focusing on ensuring that women are included. There is a total participation and representation of women in trade and trade-related policies, to ensure that their voices are heard, their concerns are heard and accounted. That is very important for us, because if we don't tap into the potential of women, we are actually losing a part of the development that we need to continue to increase in the country. It is true that lack of funding is one of the main deterrents businesses, and the reality is, as ITC, we work with different partners, we work with governments, we work with financial institutions. We are trying to work best to ensure that women have access to finances, and we are doing it with partners.
What is critical is to draw up an action plan. Singuhulumende kuthi ke sitabasita kanjani bomake bakuphi cala ngithi bakuphi bendani, then udawati kusilele bakwendako ufuna bakuthengise kuphi utokhona kuthi bakwenda kunganani bakuthengisa locally, then labangakuthengisa outside ngokuphi. So asicale nje sibaphulishe together ngoba leti imali, like you are putting those resources to waste ngendlela lengubuka ngakho. So kulele sihlangane ngako namuhla besitobuka ke ukuthi usitile ITC to do study ukuthi bomake bakuphi, I mean bomake what are the challenges laba wa face akho basendi trade yabo particularly across the board. So I think in Eswatini most women are involved in informal cross-border trade, sourcing trade cause sibasita kule international trade. Sifuna kubabona ukuthi labo make how can they better utilize lama agreements lesinawo.
In international news, Chinese authorities on Monday said the country's economy had expanded by just 4.7% in the second quarter, some of its slowest progress in years, and a sign that official efforts to revive growth were not working. The grim data came the same day as top Communist Party officials sat down for a closed-door conclave, which analysts are eyeing closely for any hint of help for the ailing economy.
It comes just once every 5 years. One of 7 major government meetings held between Communist Party congresses, China's third plenum is the one dedicated to economic policy, and this time around it has its work cut out. New data for April through June shows the country's economy grew by just 0.7% over the previous quarter. And while GDP did grow by 4.7% on a yearly basis, Q2 marks a significant deceleration from the first quarter's 5.3%. and well below analyst projections of 5.1%. Beijing acknowledging the challenges it faces.
The external environment is intertwined and complex. Domestic effective demand remains insufficient, and the foundation for sound economic recovery and growth still needs to be strengthened.
Chinese shoppers are keeping their wallets closed as a severe downturn in the country's property market continues to weigh on consumer confidence. Retail sales growth hit just 2% in June.
There's some pessimism. The desire to consume is diminishing. Everyone tends to manage their money a bit more strictly and to save more.
In response, the government has fallen back on an old strategy, heavily subsidizing investment into new factories, as it aims to boost the economy via manufacturing. The resulting excess supply, though, has led to price wars on the domestic front, raising fears of deflation that would further reduce the value of investments and slow consumer spending. And while an export boom and a record trade surplus haven't made up for weak consumption, they have provoked tariffs and other protectionist policies abroad, as Western countries try to shield their industries from cheap Chinese imports.
And that's it for our business news. It's 7 minutes after 2. After the break, we get into Nelly's discussion with the acting head of marketing at the ATA.
Be sure to catch Business Watch every Wednesday between 2 p.m. to 3 p.m, where we feature the latest updates on business news, market trends, and exclusive interviews with industry leaders, as well as insights on emerging small and medium enterprises in the commercial sector. Business Watch, your business leader.
Welcome back. Thank you for tuning in. If you've just joined us, thank you. We welcome you. This is Market View, powered by Facebook. The Eswatini Tourism Authority is edging closer to reaching the 2 million tourist arrivals by the year 2027, a target under the authority's corporate strategy 2022 to 2027. The acting head of marketing, Chunki Mdluli, says with the current tourist arrivals trends, they are projecting a long-term growth in the tourism sector.
Thank you so much, Chungi. We know that tourism is a major contributor to the country's economy. I want you to first highlight to us how big is the tourism sector.
Tourism is a massive sector, and I think most of the countries, just like Eswatini, they are pushing more towards tourism because tourism contributes to the GDP of Eswatini. Currently, we're contributing not more than 2% in terms of the economy. But obviously, we still have some other statistics that we do not collect, that we're still waiting to collect, and then we're going to share with the entire nation. Our wish is that we are able to contribute more than 5% to the GDP of the country, because tourism employs a lot of Eswatini. If you can just look at the tourism value chain from a tourist coming into Eswatini, from the petrol station, they fill in the petrol, to the garage when they buy their food or they buy their snacks, down to a woman at the market where they buy their craft, down to the hotel wherein they'll be staying and actually enjoying their food, down to an activity if they're coming for Lucho Festival. You can imagine the tourism value chain from when the person comes from their own country down to pouring the petrol, to buying the arts and crafts, going into the festival as well, not just even for the festival, even visiting other places within Eswatini. So tourism is a major factor which employs a contribution of around 7 people in terms of the tourism value chain. So we have seen that the government of Eswatini has actually said tourism is one pillar that can actually assist us in growing, in terms of growing the GDP. We have statistics which are produced by our research department. We have seen an increase in tourist arrivals for the month of June when we compared to the same month in the previous year, which is 2023. We saw a number of 83,940 tourists coming into Eswatini in 2024, where we compare it with 2023, wherein we received 61,451 visitors. So we have seen an increase of 36.6%, which is such a good number. As you know that we are coming from Bushfire Festival, wherein we had a lot of tourists coming into the country as well. So we're quite excited about the increase because post-COVID, we're really worried that COVID affected the entire world with regards to traveling because there were too many restrictions. And we have seen the travel restrictions being lifted from 2022 up until 2024.
It is quite encouraging to see the efforts that the Eswatini Tourism Authority is putting into ensuring that the tourism sector continues to contribute to the country's economy. But I just want you to highlight to us some of the activities and initiatives that you are doing to ensure that this sector continues to grow.
Domestic tourism is a first. Domestic tourism, actually, if you're not promoting domestic tourism, then you don't know who your source market is. So it's important for us to actually push eMaswati. We know that when the trade fair is coming, it's usually month end, there's the Reed Dance Festival, there's the Swazi Rally. So actually pushing eMaswati because schools are going to be closed during that time. So we're saying to eMaswati, let's take out our kids out, let them explore the beauty of Eswatini. Let's take them out so that they can know their country better. It shouldn't just be about school trips wherein they just enjoy because there's a school trip. As parents as well, let's make it a conscious decision to actually take out our kids to actually see this tourism side so that they can know more about their country. Other initiatives that we have partnered with and actually collaborated, as you've seen during Bushfire Festival, Durban Tourism came into Eswatini to promote because Eswatini is their source market. Likewise, we do the same. In May, we went to promote the kingdom during Africa Travel Indaba, wherein we're saying to the Durbanites, we're saying to the world, because tour operators were there, come and visit Eswatini because we have so many packages alongside the industry. So those collaborations in terms of Triland, in terms of Easter Road, in terms of having those collaborations between our source markets and also our neighboring countries, it actually promotes the destination because you can't just promote Eswatini as a single destination to be visited. When you're promoting in Europe, we are saying, come and visit Southern Africa. But as part of your packages, if you're designing a 12-day package, we're saying to the tour operators, include Eswatini. We don't just want to sell Eswatini as a transit destination. We want to sell Eswatini as a place where you can stay in 4 nights and 5 nights because we don't want people to stay 2 nights. There's actually a lot that you can do Eswatini.
We are appreciating the different initiatives that you are doing locally and internationally to attract tourists. But I just want you to explain to us, how do you incorporate communities in tourism?
Community tourism is more about your homestays, visiting actual communities. We also have upcoming projects, for example, like Elvin Jalweni, you have your Chilobi, we have Mvembil, we have these upcoming community projects. So we're saying nearly to eMaswati, not just people coming from outside the country. Community tourism, as UNW2 has said, it's the only major source of income that can actually give employment to eMaswati in the homesteads. We are seeing a lot of beautiful artifacts in Eswatini, your beautiful mountains, your rivers, your gorges. And we are seeing a lot of hikes which are within the community, Nelly. If you can look at Mahamba Gorge Lodge, Chilobi Walk, now we'll be going for the Lidwala Walk, we'll be going for Sibebi. These are part of community tourism initiatives saying, we as a community have seen this initiative and we're saying to corporate and eMaswati, please come and support us. So we are very, very much supporting communities. We're saying to communities, don't just sit at home, even if you've finished school, you have maybe studied tourism, you don't know what to do. Look around your community, what you can do. Because the community, Nelly, what it does is that you'll be producing your own food, you'll be having your own hotel, you'll be having your own B&B, you'll be producing your own food, you'll be hiring people from the same community. So as the Eswatini Tourism Authority, we advise and we support such community initiatives.
You currently have a strategy that states that by the year 2027, you should have about 2 million tourist arrivals in the country. How far are you from reaching that target?
Our target, Nelly, as you have said, it's we're supposed to attract over 2 million visitors, and our contribution in terms of tourism receipts has to be 2 billion by 2027. As you know, that we're coming from COVID in 2020, wherein our numbers were down to zero, because in 2019, our baseline is 2019, wherein we received over 1.3 million visitors in 2019. You can imagine if COVID didn't come, we would know that by now how many tourists we are in, and going forward to 2027, the projections. But we are hopeful because now we are over 1 million. We are just sitting at 900,000 in December. So now we are hopeful with these increases in numbers that when we reach December this year, we're just hopeful that we're going to be over 1 million. And then when we go to 2025, the projections maybe will show us that maybe next year, 2025, maybe over 1.5 million, because remember, we need to have these numbers, 2 million by 2027. So we're hopeful. We can't be exact in terms of the numbers because we don't control, the global influences, such as inflation and stuff like that, which actually affects a person to travel. If you have planned that I would like to go to such a country, you plan in advance. But if now there's a fluctuation in terms of inflation, the prices of petrol are going up and down, it might change your mind to say, you know what, I'm no longer going to Greece if you have planned to go to Greece. No, now I'm going to visit my neighboring country. So we're just hopeful that as we go towards 2024, 2025, 2026, we're hopeful that we might reach the target of 2 million and 2 billion receipts by 2027.
It has been a pleasure, Chungi, to be with you on the show. We are hoping that you will reach the target of contributing 5% to the country's GDP. Thank you for joining us on First Big Market View.
All right, and that was our business journalist, Nelson Dlangamandla, having a discussion with the acting head of marketing at the Eswatini Tourism Authority, Chungi Dlamini, just giving us a picture on the tourism statistics, particularly on current trends on arrivals in Eswatini. She also touched on supporting community tourism. Let's take a break. We will be right back.
sabatandi ukuthi njengalokhu sivile sive sithi khulumeni.
Welcome back. Thank you for staying with us. This is Market View powered by FESBIC. Thank you for tuning in. We are now connecting with Mr. Spear, our in-house economist, to give us today's financials. A very good afternoon, Mr. Spear. Thank you for connecting with us on this final episode of Market View this week. We want to get into the international market first. We saw that the FTSE 100 is advancing today as more earnings roll in, and Japan's yen scaled a 6-week high on Thursday. What influenced these highs?
Hi, Lulu. Thank you for having me. So what we are seeing there with in London with the FTSE, it's basically on the hopes of a rates cut coming up in August, and we know we are just waiting for the figures to come in and really signal on whether we are going to get that rate cut coming in. So that is what is really just happening across Europe and across London, because also today we are awaiting, I think probably right now, Christine Lagarde is going to be delivering her monetary policy statement for the month of July, and we are actually hopeful that she will signal that interest rates are going to go down probably the following month, if she's not going to be actually cutting down in this month, purely because remember she has already cut in the month of May, and the markets are quite anticipating yet another cut given the stable environment within the Eurozone and within the overall Euro region. And also, with what is happening in terms of what's happening in London in terms of the Labour Party coming into power and really just trying to ensure that they do bring back growth into the UK economy, and they do bring in the export capability of the markets. And so that's what we are seeing happening there. So simultaneously, we are hopeful that what happens in London is actually going to synchronize with what is happening in Frankfurt and Paris and the overall Euro region. So what we are seeing with Paris again is, that phobia of our election has actually faded out of the market. But what we're seeing with the CAC there is it's still struggling to get way above the 8,000 mark. Well, until we've had a clear direction on how the government is going to look like, whether we are going, what type of hung government we are going to have, and the policies that we are going to have, and how they are going to deal with the debt burden within Paris and within the greater Euro region, because Paris is one of those heavily indebted countries within the Euro region. So once we start seeing those moves, I think we are going to be in a better position to start seeing those interest rate cuts, and might actually see the CAC coming way above the 8,000 mark and back into that equilibrium. Thank you, Lulu.
Yeah, so probably when you get into the Asian markets, we saw that today on Thursday, the Japanese yen also scaled up. What influenced these figures?
So with the Japanese yen, what we are seeing there is it's been on a downward spiral for quite a long while. But what we are seeing happening in the markets today is the yen is actually gaining a bit of strength on the grounds of, the likelihood of a Trump re-election, and what we've seen, former President Trump say around, the Taiwan issue and what is actually going to happen over the overall region. With that said, when President Trump implies that Taiwan should start taking care of its own protection and the military there. So what we are seeing happen there is all the allies of the US are somehow taking a tumble against that backdrop. But then we are still awaiting to see what's going to happen. And we've seen the Bank of Japan, really trying to make means to show up markets and make sure that markets are quite able to, that the yen is quite able to stabilize. So that's what we are seeing happening there. That's why when you look at the Nikkei overall index, it has shown signs of a decline purely because, a stronger yen also means Japanese-based equities become relatively expensive compared to Taiwan, compared to Hong Kong, and then compared to China overall, and compared to other regions in the globe. So that interest rates, that currency appreciation in a way does take a few points off of the yen, and also coupling that with the likely concerns for security in the overall region and the hegemony of China. So that's why we're seeing the Nikkei scaling down a bit there. But when you move to Hong Kong and mainland China, we're seeing the Hang Seng really just moving up a bit together with the Shanghai Composite, because whatever President Trump is saying now, it seems to bode well for the Chinese economy within the region, because we've also seen President Trump really, those statements do put the chip conductors or the chip manufacturing process at a bit of a risk. And, we're hearing news coming out of the US, talks around how can they bring back and secure the semiconductors. So that's why we are seeing those movements there, with China scaling up a bit, but still struggling. When you look at the Shanghai Composite, it's still struggling to get above the 3,000 mark, purely because what we're seeing happening in China is the fact that the economy that side is relatively weak, with inflation showing signs of a deflation. We're seeing the prices going down, and with China is failing to really reach that 5% growth in GDP month on month. So that's now starting to send signals to the market that overall growth might not necessarily reach that 5% growth target. Lulu, thank you.
Okay, so moving on to the U.S. markets, what is happening there on the S&P 500? I see that it is the percentage change is down by negative 1.39%.
So what we are seeing happen there, Lulu, was actually at the backdrop of, when President Trump made that announcement around Taiwan, and also, also sending those shivers to the markets. We saw those losses shifting from. We saw the losses, we saw chip manufacturers, they were already on off sale. And then with that announcement, that short sale, with that announcement, it actually just trickled into the economy. That's why we're seeing the Nasdaq Composite really just taking a few knocks off of that, just as markets are assessing whether the US is going to be able to actually sustain the momentum. As you know, it was big cap and mega cap that was driving the market. So when we are seeing that those likely negative shifts happening within that market, that's why you are most likely going to see that downward decline, that downward rebasement. But what we are then seeing within the US market is we've seen the industrials gaining a bit out of that, because it works with what we then call portfolio realignment, and just trying to shift some of the money from the from the chip manufacturers. But what we are seeing happening, interestingly, what we hope is going to happen when the US opens for trading today, because these are yesterday's figures. When they open for trading today, we might actually see a rebound in terms of the chip manufacturers, because TSMC, the major chip manufacturing company, it's a Taiwan-based company, has actually posted improved projections for profits this year. So that might likely trickle into the economy. Might see that rebound in the Nasdaq Composite, purely because everyone is banking on the AI boom and hoping that mega cap is going to be the one driving the market until we start seeing those interest rate cuts.
Yeah, so bring it back home, Mr. Sibiya. The SZL looks steady today, still trading at 18.24 cents. Take us through the currencies today.
So with the currencies, what we are seeing there is, although we are seeing those marginal losses, that marginal weakening, but it's still within a strong region, purely because we are awaiting President Ramaphosa's address today, the opening of Parliament. And we've seen that there's been a very successful Lekotla, where cabinet Lekotla. So so markets are waiting in anticipation to hear what the policy direction is going to be today. When the president actually makes his announcement. And we also know that the South African Reserve Bank is also going to be making an announcement tomorrow, because the inflation figures did come in today, showing a bit of some steadiness there. So that's what the markets are really just responding to right now. So the currency, we can see that the Lilangan has lost marginally across all major currencies, but it remains within a very strong region. So that means the politics and the fundamentals are still well in place.
Yeah, and lastly, we go through the Eswatini Stock Exchange and the Johannesburg Stock Exchange.
All right. So starting at the Johannesburg Stock Exchange, we can see that it's relatively at a strong position, because we are anticipating a good outcome in terms of the policy direction that President Ramaphosa is going to be putting on the table today. And it's still within that 80 region. So ever since we've had this new government, we've only hit below the 80 region just once. And within our Eswatini Stock Exchange, we can see that we are still on that flat level. We haven't had any movement or any trade happening there, but we are hoping that as we move into quarter two, we get into another quarter, when we see more earnings come in, it might move.
Thank you so much, Mrs. Bia, for that analysis this afternoon. This is our final episode this week of Market View. Thank you for joining us. We've come to the end of our program. It has been powered by Facebook. We will see you next week, 2 o'clock, same time, same place. Have a lovely day and a lovely weekend.